Union Budget 2023 got presented in the floors of Parliament on 1st of February 2023, and by this time, somewhat you know what are the details of Union Budget 2023. But still, this session is going to be crucial because we are going to focus on Union Budget 2023 in respect of banking exams. So, for upcoming banking exams, the crucial points are discussed here. Along with the Union Budget 2023, we will be discussing the key highlights of economic survey, the static points of Union Budget, the trivia of Union Budget, and how the history of Union Budget unfolded. And apart from that, some constitutional points of Union Budget and the major components of Union Budget. तो आज के सेशन में हम यूनियन बजट के ऊपर फोकस करेंगे, मगर सिर्फ और सिर्फ बैंकिंग एग्जाम के पॉइंट ऑफ व्यू से. So before I begin, I must tell you to subscribe India's only dedicated banking lateral entry platform. If you have not subscribed, do subscribe us now. The course link, everything is there in the description. Today there is no time to discuss about them. If you find our study material and classes beneficial, then you must join from the links provided in description and in the Knowledgist website. So here you can see Madam Sitaraman presenting her fifth full budget in a row in Parliament. So according to Article 112 of Indian Constitution, Union Budget of a year is also referred as the annual financial statement, a statement that estimates the receipt and expenditure of government. So why we tell here that Union Budget, the story of every rupee earned and every rupee spent, because Union Budget is nothing but an estimation of how the government of India is going to earn 1 rupee, how they are going to spend it. So this is nothing but the revenue and expenditure details of the government, receipt and expenditure details of the government. There is no mention of union budget or budget in the Constitution of India, whereas the Article 112 states it as a annual financial report. Union budget is classified into two parts, that is revenue budget and capital budget. Revenue budget includes the government's revenue and government's expenditure. There are two kinds of receipts, tax and non-tax receipt. Revenue receipt means what the government is getting, how the government is earning money from public, from various other business, because in India government do business, right? They have public sector undertakings, they have public sector banks, they have, they are the largest shareholding, and you know that President of India is the largest shareholder in India. So that's why there are so much of earning for the government, and they have to spend a lot, because still India is a democracy and we have government has to spend, stay popular. Okay, that's why almost all the budgets are populist budget in by nature, budget that are populist, which envisages to give more to the public, to do more in social sector, so that they are voted back again, right? So there are two kinds of revenue receipt. Now by the time you know that government, the expenditure, the government's budget has two parts, revenue budget and capital budget. Revenue budget is the revenue receipt and revenue expenditure. In revenue receipt, what are the revenues government is getting? See, if the budget, in the budget there are two parts, revenue and capital. Revenue receipt or revenue expenditure, capital receipt and capital. Whatever is new to the government, whatever earning is coming afresh to the government is called the revenue receipt, or whatever afresh is being spent is called revenue expenditure. Like the profit they are getting from public sector undertaking, the revenue. Tax they are collecting fresh, that is a revenue. And capital expenditure, government has a lot of capital, like they have public sector undertaking. If they sell it and get something on behalf of their own capital, they call the capital revenue or the capital receipt, right? Like government has a land, government has the largest land bank, or government has developed railway stations. They lease the railway station for 100 years, right? And they are earning something. that is capital receipt, right? Because some part of the government is being spent or being lent out or is being sold. So that is capital receipt, where one asset is being sold to create another asset. It is called capital receipt, right? So this is the component you can see on the diagrams: revenue budget, capital budget. Revenue receipt has two parts: tax revenue, non-tax revenue. Tax revenue is again has two parts: direct tax, indirect tax. Direct tax, the income tax you pay, is called direct tax, and the indirect tax is the GST and other value added taxes. Nowadays there are no more value added taxes. Some of them, one or two value added taxes you can see on your petroleum, on petroleum products, or in petrol, diesel, etc., and in alcohols that is consumed by the human. There are the value added taxes that are levied by the state governments, but all of these are indirect taxes, right? So two kind of revenue receipt: tax and non-tax revenue. Revenue expenditure is the expenditure incurred on the day-to-day functioning of the government and on various services that is of citizen, like DBT, direct benefit transfer, new government initiatives, credit guarantee fund trust. They have allocated a corpus for credit guarantee trust. All that is called revenue expenditure. If the revenue expenditure exceeds the revenue receipt, the government incurs a revenue deficit. Capital budget includes capital receipts and payments of the government. Loans from public, foreign government, and RBI are the major part of government's capital receipt. Also, loans, apart from one capital is being sold, apart from one capital is being sold, and uh, the loans, etc., which is to be repaid to the public, is also called the the capital receipt. Okay. So capital expenditure is the expenditure on the development of machinery, equipment, building, health facilities, and education. Okay. So when an asset is involved, it is either capital revenue, capital receipt, or capital expenditure. Also, when we take a loan from RBI or from domestic through the bonds, or from outsiders, or like external commercial borrowings, it also creates a liability for the government. So these are the capital part of the budget. So fiscal deficit is incurred when government's total expenditure exceeds its total revenue. So that means fiscal deficit is equal to total expenditure minus total revenue. When total revenue is less, total expenditure high, you are in a deficit. अगर आपकी सैलरी से आपके खर्चे ज्यादा है, तो आप डेफिसिट में आ जाएंगे, और उसके लिए आपको क्रेडिट कार्ड यूज करना होगा, बैंक से लोन लेना होगा। सिमिलरली, गवर्नमेंट के पास कोई चारा नहीं बच जाता जब उसको खर्चे ज्यादा करने होते हैं और उसका अर्निंग कम होता है, इसीलिए डेफिसिट फाइनेंसिंग आता है। To meet the deficit, government has to do deficit financing. There are two ways of deficit financing: either they can print more currency, or they can take loans. By printing more currency, the inflation will go up. So not an advisable way to finance the deficit. The other way is the borrowing. There are two ways of borrowing: one is the domestic borrowing, and the other one is the external commercial borrowing, or borrowing from the foreigners, from the foreign institutions like IMF and World Bank. And yes, how the government do domestic borrowing? By raising T-bills, treasury bills, bonds, etc. Bonds are the debt instruments. So that when the debt instrument is issued, that means issuer takes a borrowing from you and me, right? So yes, what are the government's receipt? Find it out: revenue receipt, capital receipt. In revenue, tax revenue, income tax, corporate tax, GST, custom duty. Non-tax revenue is the interest receipt and the dividends government get, because you know that government has the largest shareholding, and who holds the share in the name of government? President of India, like SAIL, GAIL, etc. The government corporations are like State Bank of India, public sector banks, etc. Their government has a shareholding. On behalf of the government of India, shareholder's name or the promoter's name is President of India, right? So when the profit is incurred, dividend is paid, right? Then the capital receipt, date receipt is borrowings, and non-date receipt is through interest receipt and dividends. How the government spend money? By revenue expenditure. Revenue expenditure is like salaries, pensions, subsidies are the revenue expenditures for the government. What are the capital expenditures? Debt repayment, loan लिया है तो देना होगा, and that is capital expenditure. Machinery, government has to create machinery, new equipments, new infrastructure, roads, buildings, etc. are the capital expenditure for the government. So remember, capital expenditure is the expenditure on development of machinery, equipment, building, health facilities, education, etc. Fiscal deficit is incurred when the government's total expenditure exceeds its total revenue. No mention of budget in the constitution, whereas it mentions about AFS, annual financial statement. The receipts and the disbursement of the government's earning and expenditure is done into the accounts of Consolidated Fund of India, Contingency Fund of India, the public account of India. When government has to spend money, when government has to receive the revenues, so where they have to keep it, and from where they have to spend the money, from these three accounts. अगर आपके मान लीजिए आपके पास सैलरी आता है, आपके जो एंसेस्ट्रियल प्रॉपर्टी है वहां से हाउस रेंट आता है, तो आप दो तीन अकाउंट रखेंगे, वन सैलरी अकाउंट, one current account maybe for your additional businesses, or another savings account for getting the house rent. So similarly, government has three accounts: Consolidated Fund of India, the most important one, then the Contingency Fund of India, then the Public Accounts of India. First, we'll talk about the Consolidated Fund of India. So, so far, we are reading only the static point, which is going to be asked here in exam. We are clearing your funda before venturing into the recent developments of union budget and economic survey. So have a little patience. And if so far you have not subscribed to India's only professional banking platform, please do it. And you can search it in Google. It will also, if say, okay, Google, which is India's most professional banking lateral entry platform, our name will pop up. Thank you for your participation in high number. Yes, this fund was constituted under the Article 26 subsection 1 of Indian Constitution. And this fund is filled by where the money comes from to this fund. It comes from the direct and indirect taxes and loans taken by the Indian government. And how the money is spent from this fund? By returning of loans, interest of loans to the government by anyone or agency has taken it. Okay, when any agency or anyone has taken a loan and they repay it, the money goes to this fund, Consolidated Fund of India. Also your and our tax is going to this very fund. The GST you are paying by buying various goods and equipment also flows Fund of India. The revenue received by the government by way of direct and indirect taxes, money borrowed and receipt from various loans given to the government flows into the fund. The government expenditure is made from the fund, and when government wants to spend, they have to withdraw the money from this very fund, right? And remember, no money can be withdrawn from this fund without the approval of the parliament. Then comes the uh, Contingency Fund of India. Contingency means the emergency fund of India. Fund is constituted under 267 of Article 267 of Indian Constitution, and the Contingency Fund of India used at a time of pandemic, of emergency, of various crises. So the total budget or the total corpus of the fund stands revised at 3,000 crore in 2021 budget. Prior to that, it was 500 crores. Prior to that, it was 5 crores. On behalf of the President of India, the Finance Secretary or Department of Economic Affairs holds the contingent fund, and he can withdraw 40% of overall corpus at the time of the requirements at a stretch. And now comes to the public accounts of India. It is maintained as per the Article 266 subsection 2 of Indian Constitution, and this account is this account makes government of India as a banker. Government's banker is RBI, but government acts as a banker at certain times. public account is of India. The money flows to the public account of India, where government acts as a banker. Where government of India acts as a banker in when they issue the National Small Savings Fund, Provident Fund, Postal Insurance, etc. The government doesn't need any permission to take advances from this fund because it is government's own money, or government acts here as a banker. Like some other facts of budget, interesting facts we are presenting in front of you. The first of Union budget was presented in the year 1860 under the British government by a Scottish economist and politician called James Wilson. The first independent Union budget was presented by R.K. Shanmugam Chetty in 1947, 26th of November. So P.C. Mahalanobis has helped him preparing the first Union budget. Union budget were originally presented in the evening at 5 p.m. just to satisfy the British government, or because when it is 5 p.m. in India, then it is 10:30, sorry, 11:30 in London, right? Because it is GMT, Greenwich Mean Time, 5 and 3 hours late than ours. Yes, 5 and 30 minutes late than ours. So when it is morning in London, the Union budget presented here in India, because government of India was under their supervision, but under their colony. But that practice continued until 1998. Then it has scrapped. From 1999, Union budget was presented at 11 a.m. and earlier it was presented on the last day of the month, last day of the February. But from 2014, Union budget started getting, from 2017, the Union budget is getting presented on 1st of February, right? Till 2016, the railway budget was there, was also presented 2 days prior to the Union budget, right? But now it has been bundled. Union budget 1950 was printed in Rashtrapati Bhavan. Then in 98 it was moved to North Block, and 2021 onwards the Union budget has got digitalized. Now you can see the red bag carried by Nirmala Sitharaman ji holds an iPad. There is also a popular ceremony before the Union budget, which is called the Halwa ceremony. The sweet delicacy of India is prepared before the budget, and after the Halwa ceremony, all the people involved in preparation of the budget are to stay inside the North Block and gets disconnected from the outer world to maintain the secrecy of Union budget. Why did so much of secrecy is maintained for the Union budget? Because know if the union budget is leaked, or someone get to know what is going to happen in a union budget, he can make loads of money in stock market and etc. by sharing the details. So that's why the secrecy is being maintained. Okay, so Morarji Desai holds the largest record of presenting the union budget for 10 consecutive time. Nirmala Sitharaman ji was the second woman to present the union budget after Indira Gandhi ji, and the 2023 budget is the fifth in a row for Nirmala Sitharaman ji. And before union budget, the economic survey is presented in the parliament. So what is economic survey? It is presented if one day before the before the budget, or that means 31st January of every year, because now the budget is being presented on 1st of February. Okay, but it was not like this forever. Since the independence, or since the adoption of our constitution in 1950, the economic survey was presented along with the union budget, but the same got decoupled or delinked from the union budget in 1964. The economic survey is nothing but an estimation, sorry, is a presentation of what went wrong or what went well for the government in last year. When government prepares a budget for a year, economic survey collects the data from NSO, National Statistical Organization, find out how the money is being spent, which is allocated by the budget, right? It's an annual document. It is basically an annual report card of the economy which examines the performance of each and every sector and suggest future move. So, but will be uh, you will be amazed to know that there is no mention of economic survey in our constitution. That means the recommendations given by the economic survey can be dodged, can be avoided by the government of India, but still it holds a lot of importance because it discusses about the health of Indian economy and how Indian economy done or worked in last 1 year and what is the government's outlook about the upcoming years. Economic survey gives the projection of GDP numbers for the next fiscal and it contains crucial insight into countries' economic conditions. And the economic survey is being prepared by the economics division of the Department of Economic Affairs under the finance ministry with a overall guidance from the chief economic advisor. And you will tell me in the comment section who is the CEA or the chief economic advisor of India who presented last economic survey on 31st January 2023. And I leave this point for your comments. And the difference between economic survey and union budget, no mention of economic survey in constitution and it is a matter of practice, but union budget in the name of AFS is in constitution under article 112. From 1964, the economic survey is presented a day before the budget. Union budget is presented a day after the economic survey. The details will be shared to you in the PDF format. You will find out. This one is also the highlight class, more detailed analysis with MCQ coming for our inside students. Okay, and the key highlights of the economic survey of India, growth estimates, the economy is expected to grow at 7% in real terms. GDP estimates, the India's GDP is expected to grow in a range of 6 to 6.8 percentage in the coming fiscal year. The survey projects a baseline GDP at 6.5 percentage. Okay, and the fiscal deficit is to stay moderate at 6.7 percentage in of the GDP in FY 2022, and it is expected to reach 6.4% of the GDP in FY 2023. And come from the banking sector, the gross non-performing asset are at 5-year low of 5 percentage. You know, gross in total NPA of a bank is called gross NPA, and when the provisioning is reduced from the gross NPA, it forms the net NPA. RBI raised the policy rate to cumulative 2 to 5 basis points since April 2022. Yield on 10-year government bond is stable. The CRAR of the government banks is at 16 percentage, way high than the prescribed number of the prescribed limit of Basel 3 and RBI's limit. You will tell me also in the comment section what is the CRAR requirement, total CRAR requirement for the government, for the banks in India. Some key takeaways of Union Budget 2023. Now, after the statics, we are moving to the current affairs of budget or the current facts of budget. Through the budget 2023, the capital expenditure of the government for the financial year 2022-2023 has increased by 35.4% to rupees 7.5 lakhs. Capex, something that cheers the share market or the investors in India or outside India. Okay, and which was 5.5 lakh earlier in last fiscal year. Some major points highlighted by the union budget: per capita income has more than doubled to 1.97 lakhs in last 9 years. Indian economy has come to become the fifth largest economy in 9 years from the 10th largest economy 9 years back. Remember, India is currently the fifth largest economy in terms of GDP, but third largest economy in terms of purchasing power parity. EPFO membership has increased. 7,400 digital payments made through UPI, and the amount is 126 lakh crore. 47.8 crore Jan Dhan bank accounts are opened. Insurance cover for 44.6 crore person under PM Suraksha Bima and PM Jivan Jyoti Bima. Bankers has to look into these figures for your MCQ point of view. Cash transfer of 2.2 lakh crore to over 11.4 lakh crore on PM Kisan Samman Nidhi. 7 priorities are mentioned under the subteracy in this union budget. So that includes the inclusive development, reaching the last mile, infrastructure and investment, unleashing the potential to find out the potential of the country, green growth, youth power, and the financial sector. So you know how important is financial sector for the government for the growth of India's economy. Outlay for PM Awas Yojana is being enhanced from 60 by 66 percentage, 79,000 crore. A new fund called Urban Infrastructure Development Fund like RIDF will be established through use of priority sector lending shortfall, which will be managed by the National Housing Bank and will be used by public agencies to create urban infrastructure in tier 2 and tier 3 centers. Banking exam aspirants has to look into this point uh, importantly. Entity DigiLocker to be set up to be used by MSMEs. 500 new waste to wealth plants under Govardhan has to be formalized. Center facilitates 1 crore farmers to adopt natural farming. Pradhan Mantri Kausal Vikas Yojana 4.0 is launched. 30 Skill India International Centers is to be set up. Uh, Other highlights: revamped credit guarantee scheme for MSMEs to take effect from 1st April 2023. Remember, it is very important. The scheme would also give additional collateral free guarantee to MSMEs for rupees 2 lakh crore, and it will also reduce the cost of credit about 1%. Central processing center is to be set up to respond to the various complaints and filling of various forms that is formalized by the Companies Act. The maximum deposit limit on senior citizen savings scheme is increased from 15 to 30 lakhs. Important point: the targeted fiscal deficit for the year to stay below 4.5%. A new agriculture accelerator fund is to be set up. 20 lakh crore agricultural credit for the animal husbandry and dairy and fisheries are envisaged. A new sub scheme for PM Matsya Sampad Yojana with targeted investment of 6,000 crore is to be formed. Digital public infrastructure for agriculture is to be built. Computerization of 63,000 PSCS, primary agriculture credit societies, to be done with an investment of 2,516 crore. Massive decentralized storage capacity is to be set up for the farmers. 10 lakh crore capital investment to be done. It is a steep increase in the there is a steep increase of 33% for third year in a row. New infrastructure finance secretariat is to be established to enhance opportunities for private investment into infrastructure. Effective capital expenditure of the center is to stay at rupees 13.7 lakh crore. Continuation of 50-year interest-free loan to state governments. Now state government can avail 50-year interest-free loan from the government. Before that, if they needed a loan, if a loan is required by state government, they have to knock the doors of Reserve Bank of India in the way of ways and means advance. We have covered it in detail in our inside session. More than that, uh, before I go ahead, if you are not yet subscribed to India's only dedicated banking lateral entry platform, please don't hesitate to do so. More than 39,000 compliances are reduced, and more than 3,400 legal provisions were decriminalized for the sake of doing business. You know how important is ease of doing business. Based on that, FIIs or foreign direct investment, foreign institutional investors flow to India. John Biswas bill to amend 42 central acts, national data governance policy to be set up, one-stop solution for reconciliation of updation of identity and address of the individuals are to be established by using DigiLocker and Aadhaar card. Important again, PAN will be used as a common identifier for all financial services, and it will help in doing ease of business. 95% of the forfeited amount related to the bid of performance security is to be returned to the MSMEs. Bid bond performance security are part of our bank guarantee class. Please go ahead and watch them. Result based on financing to better allocate scarce resources for competing development needs. 35,000 crore outlay for energy security. Green credit program is to be notified under Environment Protection Act. Green credit, green financing are the call of the hour, and we acknowledged are going to conduct a certification course class on green financing very soon. A unified skill India digital platform is to be launched. Direct benefit transfer or a DBT under pan India national apprenticeship promotion scheme. Apprenticeship promotion scheme is to be rolled out to provide stipend to 47 lakh youth. That is not that important, but National Financial Information Registry is to be set up to serve the central repository of financial and ancillary information for facilitating efficient flow of credit, promoting financial inclusion, and fostering the financial stability. A new legislative framework is to be designed by Reserve Bank of India very soon. Financial sector regulators to carry out a comprehensive review of the existing regulation in consultation with public and regulated entities. As you have seen in the speech of the Union Budget by Nirmala Ma'am, it has been emphasized to amend the Banking Companies Act, Banking Regulation Act, and Reserve Bank of India Act. So it will be interesting for us to watch what are the upcoming amendments. More updates from financial sector to enhance the business activities in GIFT IFSC. The following measures has been taken: delegating powers of the Special Economic Zone Act to IFSCA to avoid dual regularization. Sorry, dual regulation. Okay, so IFSCA, International Financial, you fill it. IFSC, Indian Financial System Code, that is used for NEFT RTGS transfer. But in terms of GIFT City, what is the full form of IFSC or IFSCA? Tell us in comment section too. Setting up a single window IT system for IFSCA. SEZ. SEZ is a special economic zone, is a compound, is a particular area where economic activities are subsidized, or the companies working or establishing their headquarters in a special economic zone has to pay lesser tax and they get more facilities. Permitting acquisition by financing the IFSC banking units, establishing a subsidiary of Exim Bank for trade of refinancing, amending the IFSCA Act, recognizing the offshore derivatives instrument as a valid contract, amendments proposed to the Banking Regulation Act, Banking Companies Act, and the RBI Act. SEBI to be empowered to develop, regulate, and maintain and enforce norms and standards for education of the National Institution of Securities Market and to recognize award of degree and diplomas. So that means learning on of share market, stock market, and the financial markets being encouraged by the budget 2023. Integrated IT portal to be established for the investors, and to commemorate Azadi Ka Amrit Mahotsav, there is a new saving scheme launched. One time new small saving scheme for women, Mahila Samman saving scheme, and its characteristics are it will offer deposit facility up to 2 lakh in the name of a woman or a girl child for up to a tenure of 2 years, and it will be up to for March 25 at a fixed interest rate of 7.5 percentage at par with most senior citizen fixed deposit scheme with partial withdrawal options. The maximum deposit limit for monthly income account scheme to be enhanced from rupees 4.5 lakh to rupees 9 lakh for a single account, and from rupees 9 lakh to rupees 15 lakh for a joint account. Financial sector, the entire 50-year interest-free loan to the states to be spent on capital expenditure within 2023 and 2024. Part of the loan is conditional on states. We discussed about it. The fiscal deficit of 3.5% of the gross domestic product is allowed for the states. The GSDP means gross state domestic product. some estimates, revised estimates from 2022 and 2023. What happened? The estimates which are not met are revised in the upcoming budget. The total receipt other than borrowing is 24.3 lakh crore, of which the net tax receipt are 20.9 lakh crore. But the next year, the borrowing is estimated at 27.2 lakh crore and the expenditure is estimated at 45 lakh crore. Most important is the budget estimates for the next year. The net tax receipts are estimated at 23.3 lakh crore. Fiscal deficit is estimated at 5.9% of GDP. The finance for the fiscal deficit in 2023 and 2024 means next fiscal year. And the net market borrowing from the dated securities means the bonds are estimated at 11.8 lakh crore. The gross market borrowing are estimated at 15.4 lakh crore. So there are some changes in direct tax which interest most salaried persons. So there will be a common IT firm. Rebate limit is increased to 7 lakh. You know, there are two regimes, old regime and new regime. New regime where there is no deduction is allowed or no exemption is allowed, only based on your income you pay a tax. So and the new tax regime has made default, and in old tax regime you can show your savings in small savings scheme to avoid or to reduce your tax burden, right? So there are the ATC instruments, and after the announcement, the LIC and other insurance companies stock fail because no more the ATC investments are made attractive, right? So in new tax regime, if your income is up to 7 lakhs, pay no tax. Okay. And yes, what is the new tax rates? Remember, no tax up to 7 lakhs, but if your income is 10 lakhs, 11 lakhs, 15 lakhs, 30 lakhs, so this is the tax slab. When your income exceeds 7 lakh up to 3 lakh, no income and no tax. 3 lakh to 6 lakhs, 5 percentage. 6 lakhs to 9 lakhs, 10 percentage. 9 lakh to 12 lakh, 15 percentage. 12 lakh to 15 lakh, 20 percentage. And above 15 lakh, it is 30 percentage. So that means there are effectively 5 tax slabs in new tax regime. Okay, and the proposal to extend the benefit of standard deduction of rupees 50,000 to salaried individual and deduction from family pension is up to 15,000 in new tax regime is introduced. It was there in the old tax regime. Highest interest surcharge is reduced to 37 percentage to 25 percentage in the new tax regime. The limit of tax exemption on leave encashment is now revised to rupees 25 lakh. Some other highlights, there is a higher limit of rupees 3 crore for TDS on cash withdrawal is to be provided to the cooperative societies. Provisions of a higher limit of rupees 2 lakh per member for a cash deposit in KCS. And there is no much to discuss on indirect tax regime. You find the PDF and you go into it. Okay, minimum threshold of rupees 10,000 for TDS is to be removed, and taxability related to online gaming is to be clarified. Period of tax benefits for IFSC gift city is extended to 31st March 2025. There are some changes in indirect tax regime. The central GST is to be amended for as per the following norms. We will be sharing this PDF along with an enhanced detailed PDF with more MCQs in our internal groups soon. Okay, so there are some components of the union budget that we will discuss once PDF is shared. So now time is to discuss some of the MCQs again. Uh, Not again, some of the MCQs. Outlay for PM Awas Yojana is being enhanced by 66 percentage to over rupees what crore? 76,000, 65,000, 62,000 and 79,000. Just try to find out the right answer. We will show it in 5 seconds. And yes, don't hesitate to subscribe to most of our uh, professional banking lateral entry courses available for Central Bank of India, for Bank of Maharashtra, journalist officers, SBI CBO, review batch for them, RRB 2023, all are on. And the right answer is 79,000 crore. The next question, the fiscal deficit is what percent of the GDP adhering to the budget estimate of this budget? 6.3, 5.9, 6.2, 6.4. More questions as per Union Budget and Economic Survey is presented is to be given to you in internal class, and the class PDF will be updated tonight. And it stands revised. It's the estimate is at 5.9 percentage. The maximum deposit limit for monthly income account scheme is to be enhanced from rupees 4.5 lakh to what lakh crore for a single account, and from 9 lakh crore to rupees what for joint accounts. You remember the answers? It is 9 lakh and 15 lakh respectively. Right? Time to move to the next question. Rebate limit under personal income tax is increased to what lakh from is 5 lakh. I hope it is one of the easiest question for you. These are the sample questions. The real question will be uploaded in class notes. Okay, it is 7 lakh crore. Next question, the limit of tax exemption on leave encashment of on retirement of non-government salaried employees is increased from 3 lakh to what amount? I hope you still remember it. It is 25 lakhs. It is 25 lakhs. The more MCQs we discuss, more uh, tiny updates of the budget will be remembered. Okay, and with this, we come to an end of this class. I hope you enjoyed this informative session. Please don't hesitate to share this session with all your friends. This is going to benefit all of you. And yes, in case you are new to the platform, I again reiterate, please subscribe. Thank you. Thank you again, and don't hesitate to join a valid course for cracking the exams. When it comes to banking lateral entry, we produce 85%. Thank you again.